Well, the escalating war involving Iran is sending shockwaves through global energy markets and major trade routes. Iran's latest strikes have also halted shipping through the Strait of Hormuz, a key artery for a fifth of the world's oil and gas supplies. Well, for a deeper look at the impact on Singapore, we're joined by Taimur Baig, chief economist at DBS Bank. Taimur, thanks for joining us. Now, if tensions between Iran, Israel and the US continue to escalate, where would Singapore feel the first sort of impact in the real economy, and how quickly would that begin to show up here?
Good evening. It's already happening. You just pointed out on your screen that petrol prices are rising. If this goes on for another few weeks, we will begin to see those who have open contracts with gas providers, they will see their gas prices begin to go up. Even the regulated entities will probably raise their prices within a quarter or so. So the answer is, from today to the next 3 months, we will get a pretty full pass-through of whatever volatility we're seeing in global energy markets to the shores of Singapore.
Now, Singapore has only just started to get inflation under better control. So if what you're saying, that energy prices will continue to rise, how much of that progress could be put at risk?
This is a very important consideration. I think it's really important that we communicate to the Singapore public clearly that the inflation episode of the past few years were almost generalized shocks. It was the aftermath of the pandemic. Global labor markets were tight. Global prices were going up across the board. And then the Ukraine crisis caused an upside on top of that with energy prices. We're not talking about any of that for the time being. After the Ukraine crisis, global food prices went up and energy prices go up. We're only talking about very specific crude oil and LNG prices. Together, they probably don't even make 3.5% of overall CPI of Singapore. So yes, energy prices going up is a concern. Yes, it would pass through to the day-to-day lives of Singaporeans when they go to fill their cars or when they pay their electricity bills. All of that is true, but it would not have as debilitating impact on affordability as it did 2-3 years ago. Things are much more contained in one particular area. It's not an overall shock. We should not worry that much.
Well, that sounds like a bit of good news there, of course. Now, the conflict, of course, is an external shock, like you mentioned, and perhaps even some would argue a short-term one. Now, if this became prolonged, and would it become a more serious economic problem for Singapore?
Surely a prolonged crisis is not good for anybody, and we would hope that it is as short a duration as possible. If it became long-term, then there are certain questions about substitutability of the products that we buy from that part of the world. And Singapore has a fairly well-diversified source of both crude oil and LNG. Qatar is an important source, but not the only source. We buy from Australia, from the United States, even from Mozambique. LNG is purchased in large quantity by Singapore. And hence, if it becomes a protracted situation, the expectation would be that the authorities would start looking at other sources, of which there are plenty. And let's be very clear about this issue. We're not in a crisis situation where global supply is constrained so badly that even at the highest price, we cannot get the product. There will be no shortages of these products. Prices will be higher, but there is ample excess capacity all over the world, so that even if in the case of a protracted crisis, Singapore will find alternative sources of energy.
Right, thank you very much. We'll have to leave it there. Taimur Baig, the chief economist at DBS Bank. Thanks for your insights.